I don't think we got an opportunity to take a break tonight, did we? No. I think everybody should stand up for a second and just get a little loose. Take a stand up. Stand up for a second so you can just take a bit of a break. There's your break. There's your break. Okay. You've been sitting for hours, right? Okay, now you can sit back down. Maybe say hello to your neighbor if you don't know them. Okay. Now I'm going to try to be fairly efficient here through the presentation. You've heard a lot of different companies. You've heard about the actual precious metals, silver and gold. You've heard of a few developers, a silver producer. I come from Calibre side of this merger. And some of you, maybe by way of hands, anybody familiar with Calibre Mining? Okay, great, excellent. Some of you out there, excellent. Calibre became a gold producer in 2019. We acquired assets in Central America. We have grown out of those assets through acquisitions. And if we were going alone, we would be producing about 400,000 to 500,000 ounces of gold next year. Predominantly now centered in Canada, in Newfoundland, where we're just finishing a brand new, low-cost open-pit gold mine in Newfoundland. That's very exciting for us, and that's transitioning in Q3 of this year from development to production. But at the same time here, we're going to talk a little bit about a merger between Calibre Mining and Equinox Gold, another gold producer, to create a major Americas-focused gold producer. As you can imagine, I will make some forward-looking statements. Please do take the time to read some of this information on our website, maybe not here. I'm sure you'd be very surprised if I didn't make forward-looking statements. So take the time to take a look at that. By bringing these two companies together, we are integrating very strong management teams. Calibre's team is very well known for our track record, our operations, delivering on expectations. And as Johan just mentioned, Darren Hall, our Chief Executive Officer, has well over 35 years of experience all around the world. Darren worked for Newmont for plus 30 years, and he oversaw 10 major operations in Asia Pacific. He oversaw about 30,000 people, and that represented about 50% of Newmont's EBITDA at one point in time. So he's got the expertise, the experience, and the skill set to be able to unlock value here. Leading the charge in New Equinox, Chairman Ross Beaty. Some of you may have heard that name before. Ross Beaty is a very, very well-known, particularly in North America, a very well-known mining entrepreneur that has created millions and billions of dollars of wealth for shareholders. He's had numerous acquisitions. Actually, in fact, just a few weeks ago, they announced the acquisition, or his company, which he owned 30% of, was acquired by another company called CMOC. And so it was called Lumina Gold. So he's been through a lot of these types of transactions, create a lot of wealth for shareholders. And now together, we're beginning a new journey under New Equinox Gold. When you look at a gold producer, in my view, one of the things that's really important is not only the people, but the assets and where the assets are. So combining these companies, we will have tier 1 jurisdictions. We'll have tier 1 assets. In fact, New Equinox will be the second largest gold producer in Canada, and we should be at that run rate by the end of this year as we develop and ramp up the major Greenstone, it's called, mine in Ontario that Equinox has developed and is ramping up now, which should be at full nameplate capacity by the end of the year. A massive mine in Ontario. And of course, coupled that with which we call the Valentine mine in Newfoundland, which is now just transitioning in Q3 from development to production, and we should see a full annualized run rate next year. So by bringing these companies together, we'll have obviously more production, very strong cash flow, and whilst this is happening, we're at record gold prices, as you've all seen. Oftentimes, through these mergers and acquisitions, shareholders can get a little uncertain. Some shareholders of Equinox can get uncertain about Calibre and vice versa. And that may present an opportunity. And I'll give you an example of a merger that I've been through. Actually, another speaker here that I used to work with, Galena, was through the same one. And this was in 2016. The company was called New Market Gold. This company, with our management, myself, Galena, Darren Hall, lead director Doug Forrester, who's also becoming a director of New Equinox, and Blaine Johnson, we merged that business, that company, New Market, with Kirkland Lake Gold. And there was a lot of uncertainty, a lot of strife. Shareholders did not see the vision. They didn't understand the synergies. 2016, I can't recall exactly the gold price, but it was definitely not like what the environment we're in today. I believe when we closed the deal, the share price was around $5 Canadian. And 2 years later, that share price was $70 a share. It worked out very, very well for shareholders. Along the way, it was reinvesting back into the assets. They were both very good high-grade underground gold mines, and that went on to be acquired by Agnico Eagle, which I'll talk a little bit about here. So I believe when you look at these, especially with people that have track records of creating a lot of wealth for shareholders, you have to take a good look at what is this going to be in the future, not what it was in the past, or not what it is today, but where is it going? And I believe this presents a very compelling opportunity. When we look at our peer group, we're significantly undervalued. And I'm sure you've all heard this from all the presenters here tonight. And I believe that's probably true for most of them here tonight. So I think buying a basket of stocks is probably a smart thing, not just leveraging too much into one name, even though, I mean, as you've heard by some of the presenters, we own a lot of our own companies. Anyways, nonetheless, I think this is going to present a very compelling opportunity. I talked a little bit about Ross Beatty. I talked a little bit about Blaine Johnson. So all of these folks you see up on the screen here are moving forward with New Equinox in this new journey. So a strong team, strong leaders, and really, really importantly, in my mind, a strong operator in Darren Hall, who has the experience, the expertise. I've seen him do it firsthand with Calibre Mining. He has done it with Newmont, a very, very large gold mining company, and I believe he will unlock tremendous value for shareholders here. Any sort of metric you look at, New Equinox presents a compelling re-rate opportunity. Now, this isn't going to happen overnight, and this requires that team and everyone else underneath the organization rowing in the same direction and delivering. I can stand up here and say there's a tremendous opportunity here, but if we don't deliver, if we don't increase the trust of our investors and shareholders and build confidence that we can deliver on this, then those re-ratings won't happen. And so altogether, we are aligned in doing that. And I believe that that's why now is presenting a compelling opportunity. What does it take to get to top tier status? Some of you may invest in gold equities. Some of you may just invest in gold. Well, the gold equities are typically the ones that find it, discover it, explore it, permit it, develop it, and then produce that metal. And one very successful company on the left-hand side here, Agnico Eagle. I think they're probably the largest gold producer in the world now by market capitalization. They trade at about a 1.6 to 1.7 times net asset value, so price to net asset value, so they trade at a tremendous premium to their peer group. That is because they have tier 1 jurisdictions, substantial long life assets, a strong operational track record. And I believe that's very, very important. Quarter after quarter, year after year, do what you said you were going to do. So often we get into an environment where we're promising goals and expectations that cannot be obtained. We need to do a better job as an industry. We need to do a better job as companies to be able to meet those goals so we can meet shareholder expectations and hopefully exceed them, because that is how we all succeed in having higher share prices and re-ratings of these stocks. When you look at the two companies, part of the reason I put these two up here is because they have all of these key attributes. And I believe New Equinox, upon closing the transaction, which should happen in the next 30 to 40 days, all also demonstrates those attributes. And that's why I've been so focused on the delivery of the expectations. That's what's going to be required in order to reach those goals. But you can see here, we traded a 0.7. I think it's even a little bit less than that now, 0.65 price to net asset value versus this peer group that's 1.8 to 1.4 times. That presents an opportunity, but it requires us to meet or beat your expectations. You can see on an enterprise value to ounce of production over the next few years, again, if we deliver, there's an opportunity there. We traded a very substantial discount to those peers. So again, these are the key attributes to have a successful business in the mining sector. A large portfolio between the two companies. As you can see there, 7 current producing mines, 1 in construction. That's the one that Calibre is bringing that is just transitioning into production this year. So it's a transformational period, not only because of the merger, but because of their large mine, which is called Greenstone, just started up last year. It's a long life. I'll talk a little bit about it. Low-cost asset that'll be in production for decades. That's similar to the Valentine asset. Again, a low-cost, long-life open-pit asset in Newfoundland that'll be in production for decades. So you've got key cornerstone assets within the portfolio in Canada. And between the two of them, they will be the second largest producing, they will amount to, and therefore New Equinox will amount to the second largest gold producer in Canada. But as you can see, amongst all the assets in the portfolio, the company this year, when we look at Calibre's guidance and we look at Equinox's guidance that have been provided at the beginning of the year, obviously prior to the close, midpoint of that is about 950,000 ounces. So this is a very substantial business, a business that you know, at 1 million ounces of gold, you have to be very focused on meeting and beating expectations in order to obtain that. And there's a lot of work that goes into that. And there's a lot of work by our Chief Operating Officer, which will be Darren, that will run this business with a team of his. And again, he's been so successful at doing that in his career. He did that with Calibre as well. So I do believe he'll be able to unlock value. And there's a path to maybe next year 1.2 million ounces, because next year we'll have a full run rate at nameplate capacity for Greenstone. We'll have a full run rate, full annualized run rate for the Valentine mine. So we see good opportunities in the next few years. And then in addition to this, there's other growth assets in the portfolio that we'll look to unlock value in the coming years. So the great opportunity in my mind is we don't have to rush out to replace depletion. We've got assets in the portfolio that we don't have to go out and acquire and issue more shares. So we've got an embedded pipeline in front of us. I'll go back to the valuation slide here, because when we look at New Equinox in gold and the peer group, one that I like to look at, and again is part of that, the key attributes, Alamos in the middle. Alamos is an established, well-run business. They've met and in some cases beat expectations. A significant portion of their portfolio and production comes out of Canada. And they have a $12 billion market capitalization US. When you look at New Equinox, we've got greater production, slightly higher costs, but not even half of the market capitalization. That's why I believe now, starting this journey with New Equinox, I believe that we'll be able to unlock value and get closer to, maybe we don't hit that, or maybe we go beyond that. It's really going to come down to, do you believe the team that is going to deliver on these expectations that I'm setting? All the numbers here we're looking at, when you see production and consensus, we have a number of analysts on the street in Bay Street, in Wall Street, that cover the stock. So these analyst expectations based on our input and our guidance goes into this. New Equinox cash flow generation. You can see very strong cash flow generation, still a very small market capitalization. But we're at the beginning of this journey. Increased portfolio and production and cash flow. At 2,780, the middle bar chart here, you can see the amount of significant together and through the next year or two, the significant increase in EBITDA at these gold prices. On the far right-hand side, a 450% increase from where Equinox was alone. Now together, you're almost $3 billion of EBITDA at $3,200 an ounce gold. So it does generate a significant amount of revenue and cash flow. We did talk about this, but to me, this is quite compelling. I think a speaker tonight talked about new development mines, as well as the producers are producing, like you can see here, Agnico Eagle is producing almost 3 million ounces of gold a year. Are they able to find and discover and delineate 3 million ounces of gold a year? They've done a pretty good job, but arguably no, they're acquiring assets. And so you see an opportunity like this. I believe that they'll probably be keeping a pretty close eye on new Equinox as we ramp these new Canadian mines up. One of the things that Calibre particularly, I think, did quite well is reinvesting back into assets from development and exploration. So we acquired that Canadian asset, which I will talk a little bit about, Valentine in Newfoundland, last year, the beginning of last year, and we already made a fairly significant new discovery. So what big companies look for are these types of assets that are economic at lower prices, can get permitted, and then have potentially very big upside in terms of delineating a lot more ounces than what they're currently buying. That's where their shareholders will see significant returns. When you look at just the Canadian exposure here, with compared to peers, again, trades at a discount. But this is the but, in that these are new mines in this portfolio. I mean, the Valentine mine hasn't produced an ounce of gold yet. Greenstone mine has been producing for almost a year now, and by the end of this year, it should be ramped up to full nameplate capacity. And that's where companies, if they deliver that, will start to see re-ratings in their equity. So here's this Greenstone mine that I've been referring to. On reserves alone, so 5.7 million ounces of reserves. On reserves alone, this is a 15-plus year mine life with tremendous exploration on about a 250 square kilometer land package. And there's a number of other deposits that have been found on this, past producing mines that have been found on this land package. So brand new mine, low cost at the beginning of its life. Valentine in Newfoundland. Again, we're just transitioning now from the final stages of development. I think about by the time we finish, $850 million Canadian will have been put into this asset. Based on the technical report, about 200,000 ounces a year for 14 years in the mine life, based on reserves. So what we're looking at here is 2.7 million ounces of reserves. That obviously does not include the total resource, which is 5 million ounces. So at various different metal prices, maybe there's more opportunity to produce more metal there. But we have also discovered a new area about a kilometer away from one of the pits where we drilled 172 meters of 2.4 grams per ton gold, a brand new discovery. So we will be following up on that. And for me as an investor in the product, that's very exciting. The upside opportunity, what could it be? It's almost like the mystique. Could it get to 5, 10, 15 million ounces gold? There are that potential, because when we look at the belt where this asset is sitting, that 5 million ounces has been discovered on about 7 kilometers of a 35-kilometer trend. So there's a tremendous opportunity outside of that where almost no exploration work has been done. This is where Calibre started in Nicaragua. It's been a great asset for us. We've produced 1 million ounces of gold since 2019, and we started off with about 100,000 ounces of reserves, and today we're sitting at about a little over 1 million ounces of reserves. So that reinvestment back into the product has paid dividend. It's working out very well for us. This year we should produce between 200 and 250,000 ounces out of Nicaragua. The Brazilian assets come from Equinox, and those collectively should amount to about 200 to 240,000 ounces of gold production out of Brazil. So when we look at the combined package, it's a new team and there's integration work to be done. Cornerstone assets, long life at the beginning of their life, low cost in Canada in a tier 1 jurisdiction. And then when you put it all together, it's in a package of this is trading at a significant discount to our peer group. But you've got to sit back and go, do I believe in the gold price? Because, yes, it's been going up a lot over the last few months and years, but it's a cyclical commodity. It goes up and it goes down based on macroeconomics. So I do believe we're in an environment this is very bullish for gold, and we've seen that, and it'll probably continue. There will be pullbacks along the way, but it looks like we're in a very secular bull market for gold. And then you look at the ability to produce 1 million to maybe up to 1.5 million ounces based on the portfolio of gold. I believe that presents a compelling opportunity. So I appreciate everyone's time. I'm going to leave it at that. We'll be out at the Swiss Resource Capital booth if you want to come and chat further. But again, thank you for coming, and very encouraged to see everybody out here looking for new opportunities. So thank you.